Hey guys, welcome back to the channel. In this video, we're going to go over 9 reasons why crypto is set to take off in 2026. And you could start seeing it trickle its way up this month here in December. But 2026 is setting up for, in my opinion, a bullish run to the upside. So subscribe to the channel if you enjoyed the content, like the video, share. Make sure that you leave us a comment on your thoughts as well. It helps the channel grow tremendously. Other than that, let's get right on into it. Guys, so we're going to go through the reasons of why I think it's going to start moving and really rise up in 2026. Number one, the Bitcoin halving effects lagging impact. The 2024 Bitcoin halving reduced supply by 50%. Historically, major rallies occurred 12 to 18 months after a halving. Look back at 2013, 2017, 2021 cycles. That timeline places the strongest potential market impact into the late 2025 or into 2026. We're in late 2025, so like I said, December starts tomorrow. Very good chance we start moving back up. I think we get back probably to 100,000 in December, and then from there start really taking off into 2026. Number two, expanding institutional adoption. By 2026, institutions may continue increasing exposure through spot Bitcoin ETFs, spot Ethereum ETFs, and you know that there was an XRP ETF now that's live, through pension funds, endowments, banks adding smaller allocations. More regulated crypto products become available globally. Greater institutional involvement increases demand and legitimacy. Been saying this for a while. Things won't really start moving until we get like some policy and the government starts getting behind it and the big boys start coming in, which we're starting to see. And this administration, they've been here for just a year and they're so pro crypto and everything's kind of fallen into place. And you're starting to see a lot more adoption through bigger institutions and things of that nature. So it's only going to help. Think about that in the past of how much it's moved up whenever everything was just kind of so suppressed. You still get these big runs on things that didn't have the support by the government or by the current administration or things of that nature. So just keep that in mind. So the more that gets expanded, the bigger this is going to be, but it may be a little bit slower. It may take a little bit more time, and so you just got to be patient with that. Regulatory clarity improving. Countries are moving towards clearer frameworks for stablecoins, custody regulations, tokenization rules, crypto taxation. As regulatory uncertainty drops, larger companies and investors feel safer entering the market. So as regulatory things start kind of clearing up and they pass more bills and all this stuff, people feel more comfortable coming in to cryptocurrency. Number four, tokenization of real world assets, RWAs. This is expected to be one of the biggest crypto trends by 2026. For example, tokenized treasury bills, on-chain real estate, on-chain fund shares, tokenized bonds. Banks like JP Morgan and major asset managers are already piloting this. Although you hear some negativity from JP Morgan about maybe about cryptocurrencies at times, don't let them fool you. Okay, look at what they do, not at what they say. If RWAs scale, they bring in trillions in traditional assets on to the blockchain rails. Number five, continued growth of AI and crypto. AI applications increasingly need decentralized compute, decentralized storage, crypto micropayments, and AI agents using crypto anonymously could create new organic demand. So keep an eye on the AI and crypto combo. Number six, global economic conditions, potential rate cuts. Okay, rate cuts have been such a volatile thing the past month. It went from, potentially in December we get a rate cut, then all of a sudden it goes down to like 27% that we get a rate cut. Then all of a sudden it got up to like 85% that we're going to get a rate cut. Now they're having the odds that now we're not just going to get a 25 basis point, but a 50 basis point rate cut. And that would make things start getting extremely interesting. Once Powell gets out of office and Trump gets who he wants, you're going to start seeing that more rate cuts are coming. You can bet your money on that. So if inflation stabilizes, interest rates will fall, liquidity increases, which that's going to happen as well, apparently. Then risk assets, including crypto, tend to benefit. So stock market, even if we keep hitting all-time highs, doesn't show any sign of it slowing down. You're going to see some corrections throughout all this, but just keep in mind that things are looking on the up and up for the most part. Crypto historically performs best when money is cheap, hence the rate cuts. Liquidity is expanding, quantitative easing, which is what they're talking about. And it says in December, basically, they're going to start quantitative easing. Think back to 2020 when the stock market crashed and they started talking about quantitative easing. What happened? We just started shooting up, and we shot up for the longest time. Tech risk appetite is rising. 2026 could align with such conditions if central banks ease, which is what things are looking like it's pointing to. Number 7, technology upgrades across major chains. Ethereum, Solana, Bitcoin, L2s, and others are still improving. There are faster transaction speeds, lower gas fees, better scalability, stronger security. More usable, cheaper networks equals more real-world usage. Number 8, mainstream integration. By 2026, more of this may be widespread. Crypto used in direct payment apps, USDC and PayPal stablecoins embedded into commerce, more crypto features inside banking apps, blockchain in gaming, identity, and supply chain. Mainstream adoption tends to boost longer-term value. That's a fact. And you've already kind of seen it's kind of getting more and more a little mainstream. I mean, there was a Bitcoin commercial that came out several months ago. Something is showing something about like comparing it to the value of real estate and all this stuff. And there's some people that I remember there was an NFL player that took his contract, part of his contract in Bitcoin. People thought he was crazy, and he took it back when it was maybe, at about $50,000, $50,000 value, and he got a certain amount of Bitcoin. Now it's at, it hit as high as 120,000. So, and it's probably going to go a lot higher from there. So, mainstream integration. And then number 9, corporate accumulation of Bitcoin. More companies are now holding Bitcoin as a treasury asset, using Bitcoin as a longer-term hedge, integrating crypto payments or Lightning Network support, and corporate buying reduces supply on the open market, which, you guys pay attention, this is nothing more than just supply and demand, as Bitcoin has just a certain amount in circulation. So nothing more than just supply and demand, just like your real estate market, which why houses historically just kind of keep going up. There's only so many houses to be built and sold. Okay, so future plans. What's my thoughts moving forward? This is the number 10. Continue to add as the market dips or consolidates to the positions that I currently have. And if you watch the channel, you know some of the positions that I have. And I did also started just nibbling at Bitcoin, just $10 here, $20 here, $50 here, whatever, for the longer term, as well as Zcash, the same philosophy. Okay, because Zcash, if you're not familiar with that, you need to go watch some videos on it. And as it's really similar to Bitcoin, has about 19 million total it's going to ever have, and more privatized apparently as far as transactions go than Bitcoin. But other ones include, of course, XRP, Crow, Cardano, which is ADA, Jasmine Coin, Shiba Inu, Pepe, Bonk. I have a little bit of that. BAT, Basic Attention Token, BAT token, which I'm up pretty decent in now, and a handful of others. Those are the major ones that I have a lot of stake in. And so as they stay basically where they are, they consolidate or they dip, I just keep adding more and adding more and adding more as I can. I'm not kind of betting the farm on it, but I'm taking money that I'm okay with potentially losing and just putting it in there with the intention of holding until that big market pop. And then of course we talked about this BKKT, option plays going into effect tomorrow. It's kind of staying around that $15 mark, and I'm going to start an option, longer term option, expiration of December 2026, $30 strike price, and let it kind of do its thing. I was going to buy shares, but I think this option has a lot more upside potential than just kind of sitting there waiting on it to double up from here. We'll make more money a little bit more quickly that way, but could also lose it all as well, obviously. But that's why we're starting off with one option. If it happens to just like crap out and dump, then I'll go buy another option. So I think my max is going to be anywhere from 2 to 4 options on it. Keep an eye on the key indicators for the market cycle tops. Coinmarketcap.com has 30 market cycle top indicators, and we'll be kind of checking them in like we do now weekly. I'm just kind of watching, looking. Out of the 30, there has been 0 that has gone off. All right, not one. So just keep that in mind. Not one indicator has gone off saying that the market cycle top is in. So things are about to get really interesting, in my opinion. And of course, have an exit plan, guys. Everyone's going to be different. Everyone's financial goals are going to be different. The amount of money in your account that you make off of these things, every amount you look at, you're going to have, different needs and everything like that. So make sure that you do what's best for you, but have a plan in place. That way, if it happens fast, you don't have to think about it for too long. You just kind of know, like, well, I said when, XRP hit a certain amount, I was cashing out, so here it is, boom. Or if you want to have a little bit more for the ride, which is why I'm adding as things kind of dip and consolidate, is the more I have, the easier it is to say, okay, I'm going to take a certain amount out and I'm going to leave a little bit in for the longer term, because if it goes where people say it's going, hey, what if it goes to a couple $1,000s longer term, right? So I might want to have 50 to 100 extra coins in there, or maybe a couple hundred to 1,000 extra, and just hold it for the longer term, depending on how much I can accumulate. So everyone's going to be different. Okay, I know for me, like the meme coins and all that stuff, that basically, when that hits a certain amount for me, I'm taking it all. I'm taking every bit of it out, because I don't trust the longer term stability of that. Because at the end of the day, let's remember this: it's all just this digital fake things that we're basically playing with right now. We're playing with pretty much digital monopoly money, if you think about it, but you can cash it into real money, which is kind of cool. So it's nothing more than trading a stock. That is the way I look at it. Is I'm not getting emotionally attached to these things. I'm just going to look at the numbers, look at the charts, look at the cycle top indicators, and I'm going to go from there. I will tell you that you really need to get familiar with all of these things and not rely on someone from YouTube, because it's kind of ironic because I'm telling you this, but I'm talking about following someone blindly and saying, well, they said it's going back up, so it's got to go back up. Well, not necessarily, okay? And a lot of these guys, remember, there's a couple of guys that's been pumping certain coins, saying it's time to go, it's time to go, it's happening today, whatever. No one knows. Not one person knows. Not one person can sit there and time the market perfectly. And if we could, then obviously I'm pretty sure everybody would get in at the same time, and it would be insane. But it's just not the way things work. So be educated. Make sure that you learn how to study the charts. Make sure that you go on Coinmarketcap.com and find where the key indicators are for cycle tops. I'm actually going to link it in the description below for you. And just kind of keep an eye on them. And when you start seeing these things go off, you need to start kind of really thinking, like, okay, is it time to maybe consider selling some? And then when you see some certain ones go off, or a lot of them start going off, then you may think, okay, now it's time to fully execute my exit plan. So anyway, guys, that's all I got for you in this one. Let me know your comments below. Like I said, make sure that you like the video, subscribe to the channel, share this video, helps us out tremendously. Other than that, we will catch you in the next one.